Hey traders, welcome to Charts and Coffee. Hope everyone's having a great Thursday morning. All right, before we kick off the morning, let's take a look. We've had a lot of very annoying and consistent FOMC chatter all week long. And is today an exception? Sadly, it is not. We've already heard from Barkin, who, if you take a look at the 8:30 candle on a 5-minute time frame, you'll see that Barkin sent prices higher. Now, I'm going to just credit Barkin with that. Let me also mention that we had unemployment claims, but you'll see here employment claims, FOMC Barkin, and the culmination of that has clearly helped equities move higher. All right, mostly the S&P, but I'd say you can see the NASDAQ bounce from about 8:30 and the Dow as well. Now, was unemployment claims that big a deal? No, they were slightly less than expected, but more or less in line with the 221,000 that we were expecting. Is Barkin it? No, as if Barkin just has all the time in the world today. Barkin's going to be speaking at 12:05, which means it'll be the end of the morning session, but it'll be going into the afternoon session, and it will be approximately an hour before the long bond auction. So this afternoon could be kind of interesting in terms of yields and whatever else Barkin has to say. So that's what is slated for today. Tomorrow, actually, we finally get a reprieve from it all. Tomorrow, we don't really have any high impact events. We do have Lori Logan speaking at 1:30, but that's the second half of the day on a Friday. Not likely to be a needle mover with Logan, but you never know. So if you're watching the close on Friday, we'll worry about that tomorrow. But today we've got double Barkin and 30-year bond. All right, so what kind of environment are we dealing with this morning? And let me bring up my charts. Where the heck are they? Oh yeah, where are my charts? There we go. All right. All right. So what kind of environment are we in after yesterday's rally? And by the way, yesterday, I think a lot of folks had what we would consider to be a pretty good trading day. I think we took 5 winners off the table yesterday. Please remember, and this was harsh advice that I got from a mentor of mine, but I'll soften it up. Don't take credit for things the market does, because what that does is lead to a lazy analysis and a misguided notion of what's working and not working. First of all, is anyone here bearish? I mean, I've clearly failed you if big picture you're still bearish and waiting for the shoe to drop. I guess we've been waiting for that for 14 months. Yeah. So clearly I failed you if you're still bearish. I don't think anyone here in this room is bearish. All right. So then the next thing is when we are looking at uptrends, and we have the kind of day we had on, say, the 1st or yesterday, the 7th. Remember, that's the market doing the heavy lifting. My job is to position myself to take advantage of that. But that's not, look, I'm even going to say, is that great trading? No, the market moves straight up. Most anybody can make money in a straight up market. So be careful looking at examples of your trading or anybody else's, including mine, from the 7th and say, what was upstream of that move? How do we position ourselves? Because taking advantage of a straight up day, they don't happen that often. Let's be real. We can't build our career on that. So what we want to do is ask ourselves, those days are going to happen, most especially in an uptrend. So please don't be bearish. Don't pick a top, even if you give it a fancy name, like whatever strategy you want to call it. And remember that sometimes the market's really generous and does the heavy lifting, and it's our job to position ourselves in front of it. That's trading, right? So why did we have so many winners yesterday? Because we positioned ourselves bullish and in front of the move, which had nothing to do with the trade and everything to do with that day, lots of buying support, right? So that's helped me a lot in my career, because a lot of folks think, oh, there was some magical strategy yesterday. No, gang. The market went straight up. And and I'm giving you the gentle version, because I remember one of my first really big years as a trader, one of my mentors said, hey, kid, Kiddo. Oh, I hate it when you call me kiddo. Hey, kiddo, don't confuse a bull market with brains. Wow, that hurt, but he was right. And it served me really, really well throughout my career, right? Don't confuse a bull market with brains. All right, let's get to it as always. Now, by the way, gang, remember there's two ways to look at an uptrend. Okay. Please don't be that person who thinks you're going to consistently, now sometimes, sure, but please don't think you're going to consistently time where the top is in an uptrend and trade the move lower. That is very low probability. It will work from time to time. And when it does, it's going to feel great. It's going to feel like a magic trick. And that's pretty much what it is. The consistency is the boring side, right? If we know that generally things are moving higher, we wait for the sale, we wait for the green candles to dip into the gray zone, and we buy that. That's how we positioned ourselves for this. Can you imagine the poor soul who's decided that, oh, well, clearly this really strong day on the 1st of February was the top, right? And they shorted that. So don't do that. Don't do that. And look, I'm not your mother. I can't tell you what to do. But the higher probability side is find the trend, wait for the sale, and then buy it. Right? And I don't think trend following is much more complicated than that. Automate the reason that you would believe that there's support. What's support? It's a floor, it's buying, it's demand, call it whatever you want to call it. It's a point at which traders will step in and buy. I like to use volatility and take a look at the chart, right? This isn't me going back and saying we did this and you can see it, right? Wrong. You can't hide it. It's either there or it's not. The green candle goes into the gray. It always reminds me of Garanimals, right? If you match up the animals, you'll have a good outfit. I still need that, clearly. All right, so let's get to it. Let's get to it. As always, phone lines are open for your requests. Go ahead and type them in. What are you looking at? What time frame? And are you maybe already in the position? Okay. So first up, I am Groot asks about the 1 hour AMD. All right, let's go take a look at 1 hour AMD. It's not as bullish as it once was, but it's certainly viable. And then again at 9:30, I'll get the fresh daily price movement ranges populating once the market, the bell rings, once the stock market opens. You can see what's happened in the past. You know, if you're waiting for the candles to go into the gray, and for the most part, it's been working very nicely. We want to keep an eye on that, on those opportunities, right? Be aware, however, nothing is infallible, including my daily price movement ranges. So wait for those pullbacks. And now that we've gone into a sideways market, I'll likely be a little bit more discerning about when I'll buy as opposed to when the trend is moving higher and the follow through is a little bit more a little bit more predictable in terms of reaction. Same thing goes with Apple. So for those of you wanting the daily price movement ranges, you can get them over at Simpler Trading. I don't have them plotting until 9:30. So that's going to be my buy zone. All right. It's 9:09. I don't have them plotting. So all I can do is show you what they've done recently. I would actually not trade Apple. So this is a little bit less about, AMD I would focus on. It's one of the relative outperformers in the SMH. Apple, I think there are better stocks out there to focus on. Apple got a pretty good boost with the goggles or the Vision Pro or whatnot. I would leave Apple alone because when I take a look at all the stocks within the XLK, I don't know that it's Apple that's really grabbing my attention. I don't know that's Apple that's earned my capital and my attention. I think there are better stocks out there to focus on, but nonetheless, we'll wait for the daily price movement range. All right. Next up is any ideas for swing trades in IWM. So of course, when we're looking at the Russell 2000, we're going to take a look at the RTY futures. RTY futures are absolutely the laggard of the four, right? If we're looking at something that just isn't getting traction, gang, we're hitting higher highs in the NASDAQ. We're hitting higher highs in the S&P. Have we let go the nonsense, the utter nonsense that the Russell leads anything? I hope through 2023 and into 2024, we can ditch a lot of things that are repeated very often, but are absolute nonsense. This leads nothing but itself, I guess. So take a look at the Russell. I would leave that one alone. Java, I love that you're asking about it because it should get its time in the sun. but it's not quite yet. And I would say the culprit, you might say, well, Raghee, why? Why leave this thing alone? This is why. If I'm looking at NASDAQ, we know to look at the Magnificent Seven. Even if we're looking at the S&P, we know to look at the Magnificent Seven. If we're looking at the Dow, add in financials, add in healthcare, but it's still a lot of influence from the same kinds of stocks that move the S&P and the NASDAQ around. The Russell is its own thing. The Russell is composed with its own set of stocks in its own way. It's not high concentration weighted. And if there is a sector that has a disproportionate influence on the Russell, it's this thing right here. It's regional banks. Look at regional banks. Now, regional banks are finally oversold again. So if you're wondering, Rog, we're actually down at the oversold level. You can see there, the green zone. Could there be a buy? If KRE can trigger an oversold buy around, I'd say 46 to 45, then, right, this is very much an if then I would say look for Russell or maybe even KRE calls, right? So that's at that point, I would say IWM Russell could be a really solid setup, but I think it's really going to be based on what I see. And I say, I think, I hate saying that. What we want to remember is our expectation of what the indices are going to do are largely going to be based on what we see those sectors and individual stocks do. And that's where IWM and KRE are inextricable. So what we want to do is wait for KRE to have a setup, maybe buy that, and then IWM should be able to basically be able to rally, which it seems like it would like to do, but KRE is sort of that, dragging it down. All right. Next up is Ron asks if I could use two indicators with one crossing the other at certain points to use a bullish or bearish move, which indicators would I use? Ron, I'm not sure what the question is. If you want to know what indicators I use, my friend, they're on my chart. So if something else works better, I'll test it for the better part of a year, and then I'll let you all know about it. But what two indicators? I'm going to use what's on my screen. So wave, daily price movement range, and I call it a slow stochastic. It's really not a slow stochastic anymore. We've so changed the calculation, but that oscillator at the bottom of my screen that needs to be called something else. Let's phrase this another way. What two reasons, what two zones when overlapping, or what two reads when synchronized would help? Always start with structure. And if my structure, for example, let's stick with the IWM here. If I have a neutral environment, the two things that I want to look at would be some sort of support and then a confirmation of support. So the two indicators that I'm looking for would be DPMR plus the oscillator, or maybe I'm going to use the Darvis plus the oscillator, right? If it's trending, let's go to a trending environment. For example, we're in shop right now in the mastery, right? We bought on a dip. What happens when you don't buy on a dip, by the way? Let's say you buy on, the up day. These are unsustainable moves, right? You get shaken out only to see even higher highs. So be careful entering trending markets or stronger stocks when they're moving higher, because the moment it pulls back a little bit, and it probably will, right? You can't hold on to it. So that's why you got to wait for those pullbacks. So how would I use two indicators on my chart to do that? Well, since it's a trend, I don't need an oscillator. Oscillators do what? They measure oscillating, right? Trends are not oscillating. So I focus on my multi-trend, which is green trend, green momentum. And then what do I ask myself? What levels now are valid? The wave is valid. The DPMRs are still valid. And that's how I would combine the indicators that are on my screen. All right, next up is it too late to get into Mara? I'll tell you what, I don't play the Bitcoin stuff. I don't know. I mean, we'll look together, green eggs. As far as too late, here's what I would say. And again, I don't have skin in the game, and frankly, I don't plan on having skin in the game. But I will say this. if I'm looking at Mara for the first time with fresh eyes, which frankly I am, I'm going to notice a couple things. Neutral trend with the trend that preceded was up. So I'm going to have bullish bias. I'm also going to have bullish bias because we're above the 200, those white dots on my screen. So I already know which way I want to trade. I'm with you. I'd rather be long. But if the justification for Mara is it's coattailing something else, in this case, Bitcoin, we want to know whether or not it's moving like Bitcoin. If it does not look like Bitcoin, it's not tethered to that narrative and it's got a narrative of its own. That's a really easy way to say whether or not something can help pull something else up higher. Mara of its own accord has Darvis support just below 15, has 200 propulsion support at 15, but this is likely going to be a sideways market that's compressed by the Darvis. So there's two ways to look at this. Either buy the support and wait for the breakout through 20, buy the support, pay yourself at 20, still waiting on the breakout, but at least at this point you've got unrealized profit now realized, in other words, in your account, or you could play the breakout. It's the last that I don't want to do. I don't want to be buying with everybody else when it's so obvious we're busting up through 20 bucks. The calls are going to be more expensive. The volatility and the speed's going to be greater. Buy it before everybody else wants it, right? Most traders trade like they're buying the Christmas present their kids want on the 19th of December, right? I still remember, how many of you remember, I'm going to date myself so badly here. How many of you remember Cabbage Patch dolls? My sister wanted one of those. I think mothers were literally risking their lives to buy these ugly little dolls for their children. What else was a big thing? Oh my gosh, what was that Teddy Ruxpin, the talking bear? Again, that one again, parents were literally in a gladiatorial match trying to get these stupid toys. Sega, remember when Sega was the thing? Right? So, yeah, we don't want to be kind of buying the Beanie Baby Momo, right? We don't want to be doing that. At least I don't. So if there's a directional bias, how about buying support instead of buying through resistance? And then that way, the resistance is an optional target. So that's the way I would look at Mara. Now, as far as Bitcoin moving with it, that I don't know. But at some point, the setup in Mara has to be based on Mara, right? All right, what about win for a swing? On a pullback, I mean, punching up to higher highs is nice. The trend is nice. That's going to add a lot of bullish attention. We need the bullish attention, right? Why do trends work so well? Because they already have bullish attention. People already know they want to be buyers. We already have this built-in audience and this built-in buying demand in an uptrend, right? So it's our job to find those uptrends as soon as possible. And then when everyone else is panicking because something's not going straight up, when everyone starts throwing a tantrum because new highs every day aren't happening, we'll scoop it up, right? We'll scoop it up. This one's a little fresh, but at least it's above the 200. And so it's breaking the 200 is a big deal. Even if we dip back down below it, that machete's already cut through the jungle. There's a little bit of a path there. So that first break through the 200, even if we sink back down to it and hit, say, 95 and change, that's okay because we've already cut through the brush, so to speak. All right. Okay, Steffo asked a great question to end the day on. Thank you for the question, Steffo. Yeah, I might be using some technobabble that doesn't resonate. Yeah, let's go to the ES. And the question is, you use volatility as support. So one of the indicators on my screen, Steffo, is one that I created about a decade ago now. And it's the idea of curating price range movement and plotting that on my chart. This is not price-based or volume-based. This isn't about previous highs and lows. This is about how many points per day is the S&P capable of making, and then we superimpose that over the chart. Now, I'm curating it differently than what I've just described, but that's basically the what of the indicator. I don't like black box indicators. I will tell you what it is I'm looking at. In this case, I'm looking back, saying, all right, what does the S&P typically do? How many points could it move? And then we plot that on the screen. That's using volatility. And that's unique. That's something that really doesn't exist out there except for, frankly, on my chart. So when we look back at historical volatility, we say, hey, the nature of something is usually pretty not predictable, but consistent. Boom, put that on the chart. And we have instant volatility-based support and resistance every day. And it's been working really, really well, right? We're not getting a ton of mean reversions to, say, the wave. That's been eluding me. So what's the other level that I can look at that has validity over time? And that's going to be volatility-based support within the context of an uptrend. And by the way, that means volatility-based resistance is one kind of target. And that's exactly what we did with SHOP, just as an example of that we have as an alert for members. All right, gang. As always, thank you so much for being here for Charts and Coffee. Caffeinate and dominate, gang. I will see you tomorrow. Same time, same station.